Bitcoin's price has been on a steady rise over time, suggesting increased adoption. But what exactly drives that adoption? Analysts have been exploring various models, including valuation models based on an S-curve, a common framework used for measuring the adoption of technologies. In this model, Bitcoin adoption follows the familiar trajectory of other transformative technologies, such as the internet, computers, and telephones. If Bitcoin follows this S-curve, its value will grow exponentially, particularly in the early stages of adoption. However, what makes Bitcoin's case so unique is the scarcity effect. Like many have discussed, Bitcoin's halving events play a significant role in this adoption pattern. These halving events, which occur every 4 years, reduce the number of new Bitcoins entering circulation. This built-in mechanism increases scarcity, which is reflected in rising investor demand and price. Plan B, an anonymous Bitcoin analyst famous for his stock-to-flow model, has been a vocal proponent of this theory. He believes that Bitcoin is currently in the midst of a bull market and is on the cusp of a massive move upward.
Before going 100% into Bitcoin, I was an institutional investor too, for 25 years. And as an institutional investor, I saw a lot of technical analysis in the Bitcoin space, but not much fundamental analysis, and especially a valuation model was missing. So that is of course very difficult because an asset like Bitcoin has no cash flow, so it's difficult to evaluate it with discounted cash flow models. A bit like gold actually, so you could go to production cost-based valuation. Clearly Bitcoin price increased over time, so that could be adoption, right? Maybe an adoption-based valuation model, S-curve, for example. But then again, what drives that adoption? So for me, that was the most fundamental question at the time. As an institutional investor, have more shares and dilute the value. Bitcoin is really scarce from that point of view.
Over the course of 2024, Bitcoin's price has increased by 44%, sitting comfortably at over $63,800. The approval of spot Bitcoin ETFs, coupled with the anticipation of future halving events, has set the stage for a significant breakout. According to Plan B, the current $60,000 range is reminiscent of Bitcoin's $10,000 consolidation in 2020, right before it surged during the following bull market. He predicts that Bitcoin's price could potentially double by the end of the year, especially as institutional adoption continues to grow. In Plan B's view, the next few months will be critical. We are likely to see sharp corrections, followed by price pumps that could bring massive gains, leading into 2025. As institutional adoption increases, the market is poised for even higher highs, potentially moving toward a six-figure price target. Plan B is not alone in this sentiment. As more institutions adopt Bitcoin, it appears that the days of Bitcoin's Wild West volatility are being tamed by increasing market maturity. This brings us to the broader context of Bitcoin's price predictions and market cycles. In Plan B's latest forecast, he uses a simple, linear regression model to predict price movements. This model predicted a Bitcoin price of $55,000 when the asset was trading around $4,000, something that many found hard to believe at the time. Yet as we have seen, Bitcoin's price did indeed reach these heights, lending credibility to his methods. The model is based on the average value of each halving cycle, adjusted for volatility, which in Bitcoin's case is extremely high, around 80%. After refitting the model with 5 years of data, Plan B's model predicts a price of $500,000 for the current halving cycle and $4 million for the next one, which is expected to take place in 2028. While these figures might seem outlandish to some, they are grounded in the logic of scarcity and adoption, as well as the continued influx of institutional interest. The model allows for a wide prediction band, ranging from $250,000 to $1 million for the current cycle. This wide range reflects the inherent volatility of Bitcoin and the difficulty in making precise predictions. Just recently, Plan B shared his latest predictions.
Bitcoin closed September at 63,000, and it's the 8th month in a row that it's in a 60K to 70K trading range. It's really weird, and it never happened before. Normally, the bull markets, yes, it is still in a bull market because it's red dot bull market. Normally, a bull market means price go up. Historically, when it's red, when it's bull market, prices went up in 2011, 2013, 2017, and 2020, 2021. But not now. Now it's sideways. And, well, you know, I do not believe in manipulation. Yes, it can be manipulation, but not for 8 months. That's something different at work, I think.
According to him, Bitcoin could reach $70,000 by October, $100,000 by November, and $150,000 by December, fueled by massive inflows into ETFs. From January through July 2025, he anticipates a chain of events that could drive the price to $500,000, with a possible scenario in which Bitcoin reaches $1 million by the end of the year. One of the big questions investors must grapple with during this halving cycle is whether diminishing returns will become a factor. Historically, each cycle has brought about diminishing returns, but Plan B remains adamant that this won't be the case this time around. The logic behind his stance is rooted in the S-curve model. Technologies like the internet and telephones experienced exponential growth in value and adoption until they reached around 50% market penetration. Bitcoin, according to Plan B, is still far from this point. He believes Bitcoin is still in the early stages of adoption, possibly at around 10%. Therefore, the growth potential is enormous, and diminishing returns are unlikely to kick in until at least 50% of the population has adopted Bitcoin. Although past cycles have shown some outliers, particularly the market tops of 2013, 2017, and 2022, Plan B believes these anomalies have skewed the data, making it appear as though diminishing returns are happening sooner than they really are. This view will be tested over the next few years as we witness Bitcoin's continued adoption. Looking back at previous halving cycles, we see that the most significant price increases have occurred just after the halving event, followed by a flattening period. This pattern has held for the last 4 halving cycles, and it's likely to continue. Plan B's model tracks this pattern, showing wide prediction bands that range from $250,000 to $1 million, reflecting the immense uncertainty and potential upside of Bitcoin. The halving itself is critical to Bitcoin's price movement. By reducing the number of new Bitcoins entering circulation, each halving event increases scarcity, driving up demand. Plan B suggests a simple trading rule: buy Bitcoin 6 months before the halving and sell it 18 months after. This strategy would have significantly outperformed a simple buy and hold strategy during past cycles. More recently, we've seen growing institutional interest in Bitcoin as an emerging global monetary alternative. BlackRock, the world's largest asset manager, has echoed this sentiment. BlackRock's head of digital assets recently stated that Bitcoin is becoming an essential part of institutional portfolios, not as a speculative asset, but as a form of global money with no counterparty risk. This is a significant development, especially as more ETFs and investment products bring Bitcoin to the attention of larger institutions. In fact, BlackRock has gained SEC approval for Bitcoin options, which is another milestone in the mainstream adoption of cryptocurrency. With each new institutional entry into the Bitcoin space, we are likely to see increasing demand, which will drive prices higher. Plan B has even speculated that by 2025, the US could start building a strategic Bitcoin reserve, pushing the price to $400,000 within the next 5 months. The potential for Bitcoin to reach $500,000 or even $1 million by the end of 2025 is becoming more plausible as the factors that drive demand, scarcity, institutional adoption, and global macroeconomic instability continue to align. Adding artificial intelligence to the equation could accelerate these trends even further. AI is expected to play a crucial role in regulating financial markets, and the integration of Bitcoin into these systems could push its price even higher. However, this rapid growth may not be sustained indefinitely. Plan B foresees a distribution phase in 2026, during which Bitcoin's price could fall back to $500,000, followed by a potential bear market in 2027, which could see Bitcoin's price drop as low as $200,000. Despite these potential downturns, the long-term outlook for Bitcoin remains bullish. As more institutions adopt Bitcoin and its integration into the global financial system becomes more pronounced, its value is likely to grow exponentially over time. Plan B's predictions may seem ambitious, but his track record, combined with Bitcoin's built-in scarcity and increasing institutional demand, makes these forecasts worth considering. The next few years will be crucial for Bitcoin's development as an asset class. Whether it hits $500,000 or $1 million or experiences another sharp correction, one thing is certain: Bitcoin is here to stay, and its impact on the global financial system will only continue to grow. What are your thoughts on Plan B's predictions for Bitcoin? Will it hit 1 million, or will the market see another significant correction? Whatever happens, Bitcoin's journey is far from over, and it will be fascinating to watch how the market evolves in the coming years. Thanks for watching. If you found value in today's video, be sure to hit the like button and subscribe so you don't miss out on future content. Drop a comment below with your thoughts or any questions, and I'll make sure to respond. And hey, if you know someone who would benefit from this, share it with them. Don't forget to turn on the notification bell so you're the first to know when new videos go live. Until next time, keep pushing forward and take charge of your success. I'll see you in the next one.